Rightio, yesterday was a big day and let's do a video about it, okay? Because it's important to understand what's going on and how Cycle Edge can really help us out here. This is gold, and with gold, with Bitcoin, with Euro dollar, we had a bunch of moves which were quite interesting. And the important thing, as I always say, in the market is to know what will happen before it happens. And obviously that gets a lot of eyebrows and eyes rolling and eyebrow raising and stuff, but whatever. So as you all know, from the beginning of August, I printed this report on the 23rd of July. For the month of August, we already know the setups. I've got a Monday trade day, I've got a Thursday trade day. Both of them 3 stars. And in addition to that, I've got the market insight. So it's telling me what's highly likely going to happen. So I better check what's going on. And I read the weekly insight. And I did a video on this as well, so just check it out on how to work with your Cycle Edge. Major long cycle event happening on the 1st of September, and the window opens on Thursday, 20th of August. Because this is a major long cycle event, it's going to open this week, okay, and it's going to start to peak towards the 1st of September. So that's going to go for 11 days, right? It's building up, it's cooking. And then I've got Wednesday here with the major long cycle event. I've got the macro event this week. So on Sunday, 16th of August, fast cycle reaches vertical extreme, vertical crest pinpoint, swing highs and lows. And this is how we've got to Monday the 17th. And this is, let's go to Monday the 17th, right? Let's take a look at the daily, okay? That's your Monday the 17th. And then on Tuesday, we have the market coming down, okay? And then we have the Wednesday. Now look at this comment. Wednesday, 19 August, 6:13. Intraday cycle enters extreme range. Emotional extremes. Price overshoots. Standard projections. Price overshoots standard projections, producing blow-off tops or liquidation sweeps that snap back once inbounds. So it means it's got a short horizon. So we're going to clean out the market basically. This is what's going to happen on Wednesday, high likely flashing the market. So let's take a look. This is Wednesday. All right. Now, with this, remember I said, guys, this is the zone where we want to be selling. And on Monday, it really did sell. Wednesday, complete flush out. Thursday is a trade day again today for gold. So what do we want to be doing on Thursday? Looking to sell from the highs. Okay. And Wednesday is telling us that's logical too, because, we're going to have emotional extremes, price overshoots, blow-offs. So yeah, okay, so we can sell off on Thursday. So Thursday, Friday, we can look to come down. How? Obviously, you have your days as well. So you go to your Wednesday. Look, this is Wednesday. On Wednesday, I'll even explain what's going on. And look at these hours here, guys. Trap-like reversal from 3:40 to 10 past 5. Momentum push continuation. So whatever happens here, we've got a continuation going into 9:35. Plus, on a Wednesday, yesterday, I gave the hours as well, 8:45 too. And then here is the scenario for what's highly likely going to happen. I'm not saying this is 100%. I'm saying this is high probability. And when I say high probability, it's a good bloody probability. So let's take a look. Wednesday. Let's take a look at gold, right? So I'm just going to move this report out of the way. Put it on my next screen. And let's check it out, what's going on Wednesday. Now, these are the trading hours for Wednesday. Market buying from the lower end, dipping down, breaking up again. You can see that, you can look at the candles at the hours that I gave. Push up, push down, push up, all right? And then we have a breakout. Now look when that's happening. What did the cycle edge report say? It said to me 7:45 to 11:55. I got a trap-like reversal. So this is 7:45 there to 11:55. Well, this is 11:55. All right. So trap-like reversal. Boom, boom. Same here. Look, I've got what do I have? I've got another trap-like reversal. When's that happening? 3:40 to 5 o'clock. Look, let's take a look at this. Between 3:40 and 5 o'clock. This is 3:40, guys. 3:40 to 5 o'clock is there. That's your 5 o'clock. Trap-like reversal. You see how the market just bang, reverses, just breaks out. And then what is it telling me? 10 past 5 to 9:35. Momentum push continuation. Well, momentum push continuation going into 9:35. Here, that's your 9:35. And then even to closing. Okay, so just, knowing this in advance is like, you're not going to get this anywhere else. Okay, this is like, serious in-depth cycle analysis, looking at the past, calculating intervals where highly likely things repeat themselves. Look at the hours. 10 past 11. Let's say just round it up to 10 past 11. 10 past 11. What's that bar there? Okay. And that's that. Same thing if you take a look at Bitcoin. Check out your cycle edge report. Bitcoin, same thing. Look at that. 6:15 intraday cycle enters extreme range. Emotional extremes. Price overshoot. This is like written on for the day. This is the daily insight. And it's already telling you it's going to be probably a blow off. Going into 6:13. Well, let's take a look at 6:13, shall we? This is your 6 going off. Look at that. So the market is already doing it. Starting again, 3:40, 10 past 5. How the hell could I know that? From a report I printed on the 23rd of July in the evening. Okay, I printed this in July for the clients so I can put it onto the website before August. And look what it says. Look at this. Look at this, it's like crazy. On Monday, it's critical. And it's a shock day. I went over this. Guys, it's a shock day Monday, shock day Tuesday. Okay, so this is going somewhere. I've got Thursday Apex. And this is where we're at. Look at Monday. Let's take a look at Monday. Why is Monday the shock day? That's your Monday. Look at all these small bars mucking around. And this is bang, Monday. Where is it doing it? I gave you guys the price. TSM pricing, remember? This was the zone. Look, 63,957. That was the weekly. That was the daily. I said this is your zone. Market starts to go up, never comes back. Let's take a look at Monday's hours. Anybody wanted to go long? Check out Monday. Let me just put this back into the other screen. So I've got what, 145. This is 145, guys. Pretty much where it is. If you wanted to wait and say, well, this is below the weekly price, wait till it goes up. What's the other hours? 7:20, 7:45. 7:20, 7:45. There's nothing to do here. What about 1 o'clock? What about 1 o'clock? That's your 1 o'clock market clearly pulling back and then taking off. That's your bingo. Why? Because look, remember what we learned in technical analysis. We want to go in a direction. Look at this impulse wave. Let's make this a little bit more clearer so you guys get a good idea. Look, this is your impulse wave and it just broke out of the box. Where's the box? This is the box, right? In fact, it broke above there. Market comes back to a trading hour. Do you need to draw the box? If you know, you don't have to. You can just say to yourself, well, wait a minute. This was Sunday high, the previous day high. Now we broke out. We're coming back. What does that tell us? From technical analysis, what is that? That is an impulse wave. Impulse wave from a low to a high. Where are we? We're at 50%. At a trade hour. This is why I get pissed off with people who say, well, you know, Fibonacci's got a bunch of levels. I know Fibonacci has a bunch of levels. But we have time with Fibonacci. We don't just have Fibonacci. If you just had Fibonacci, and if you were looking for a gap fill, you would still enter here, even if you didn't have time. So that's your entry, and that's your bingo. What else did I have? 1 o'clock, and I have 5:15 to 6:30. 5:15. Guys, this is 5:15 market breaking out into 6:30. 5:15 going into 6:30. What could you have done here? Very, very easy. That's your zone. It's a shock day. You have an impulse. You're following the impulse. What is that? That is a runner. If you took technical analysis from me, that is a runner. Impulse. Look. Top, top. I'm not waiting for this. This is a trade hour. Look what's happening. Top, bottom, top. Here, this top I'm talking about. So when you initially draw it, it would have been like this. Why? Because this is a trade hour, right? So that's you're waiting for that. Once you're waiting for it, this is going to be your zone. And you're thinking, okay, if that's an impulse wave, I want to carry on with the market. And you'll break out. Look at that. Goodbye kiss. Everything we've learned in technical analysis. This is what's happening. It's the scenario with time. Okay, so if you miss that and you're in New York, you're thinking, wait a minute, impulse pullback. We're now in a runner case. What can I do? If it breaks out, I just follow through. What's my target? Well, this is going to be your target, isn't it? This is going to be your target. And that's where the market stalls. Your first target is going to be that. What's going to be your second target? That break all the way there. Take it. Okay, now you see that same length. The length of that, okay, that's your target. All right, so 1 going into 2. Okay, that same length is 1 unit, and that's your 2. So nearly there. It did it the next day, but you still would have been in the game here. All right, you still would have like taken profit there. You see what I mean? It's the same thing. Or where's that breakout? That breakout is there. Okay, so as you can see, it's pretty damn close. That's how you measure stuff, even if you're not using any indicators. Okay, I like to use just TSM, time, space, motion, because I get pricing from it, and that's it. Once I get pricing, it's the same thing. Look what's happening here as well. Got a bunch of gaps. What's that turning out to be? A runner. Same thing. All right, we're going into a runner. Now, this is going to be interesting. Why? Because we have a bunch of gaps. I've got 1, 2, 3. If it's a trade hour here on a trade day, I want to look for a sell setup. So if they stop sweep, come back quickly in and then goes sideways, any breakdown, that's it. It's going to come to close. It's a pump looking for a dump. And that's it. Where? From the targets. Okay, from the target. So that's basically it. If you just follow through on the hours, the days, with your drawings, with your technical analysis, I'm telling you, it's just like you can't go wrong. I mean, you can go wrong, obviously, but understand the concept that in any case, you're on a really good, highly likely level. So, coming in from the weekly insight and then following through with Monday, shock day, high volatility, expect pivots, avoid high stake entries. So stick your head in there. Look at what's going on. Okay, V-shaped retest from 6:35 to 9:55. Let's check it out. When was that? On a Monday, 6:35 to 9:55. Monday. This is your Monday. $6.35 is there, V-shaped. Where to 9:55? Look at that. 9:55. Guys, this is your 9:55. It's a V-shaped retest. Market going up. Now we're coming down. I've got sustained pressure into 150. Look what it says. From 9:55 into 150, I've got sustained pressure. And on a Monday, I've got 1 o'clock. Okay. That's your 1 o'clock. And I've got sustained pressure. Market coming down. That's a Fibonacci trade hour. And then the market blows off. Now we're going to the upside. Okay, so it's just a matter of reading the report. I promise you, this is one of a kind report. I'm finding it really hard to make people believe what they see, but what can you do? All right, so just get your head around reading the report. Set yourself up with your technical analysis levels and just trade it off. Look at the same thing for euro dollar, right? Monday, Thursday, it's going to give you the same kind of thing, whatever you're trading. With NASDAQ, we had Monday. Okay, so same thing. All right, this is Thursday. We had Monday and Thursday. So Monday the 17th, 3 stars. Thursday, 2 stars. Check out what's going on, how they sold from the top. With the Dow Jones, remember we had Tuesday, Wednesday. I said, guys, this is already down. So you don't want to be selling Dow Jones because it's already down. So Tuesday, Wednesday, look for a spot to buy Dow Jones. It'll start sizzling. It's cooled off and it'll start heating up and start buying the lows. If you got a technical setup, do that. So good luck. All right. Have a great weekend already. Tomorrow's Friday. I'm on a holiday. So I thought this video might be good to kind of like when we're going through these things, it's just like you guys know in advance. Nobody has a better edge than you guys. Just simply get your head around the report, read it, be intimate with the report, and then draw your lines and say, well, if this is a trade day, if we're at a low, where would I buy? Because that's your tight stop loss entry. All right. Have a good weekend. All the best.